Hello, everyone, and welcome to our new investor webinar. I am excited to talk to you all today about investing in commercial real estate, otherwise known as CRE, and how EquityMultiple helps self-directed investors like yourself build a more diversified portfolio, offering rigorously vetted passive real estate investments for as little as $5,000. As we go, please feel free to put any questions you have down below, and we have time for questions at the end. So this is a new investor orientation where we are going to get into how EquityMultiple EM works, what CRE is, and how you might be able to use our platform to achieve your investment goals. We are also going to go through how to access our dedicated investor relations team for any follow-up questions you may have, where you can always speak to a real person, myself included. So my name is Abby Blumenfeld. I am the investor relations analyst here at EquityMultiple. Previously, I was with Cushman & Wakefield. I have experience in both the Boston and New York City real estate markets. And here at EquityMultiple, I'm responsible for all inbound investor inquiries. If you call, chat, or email us, there's a high likelihood you'll end up speaking with me. So let's get into it. So a little bit about EquityMultiple. We make real estate investing passive and simple. You can access these previously very hard to access assets through a streamlined process. To date, we have a 17% net return on all realized investments. EquityMultiple was founded in 2015 by Charles Clinton and Marius Schulson. The origin story of EM begins with when Charles was looking into buying a building in Brooklyn with some friends and realized that without connections, investing in real estate on a large scale would prove to be pretty difficult, and thus EquityMultiple was born. Part of our mission is to make investing in CRE as easy and simple as possible. Previously unattainable, inaccessible opportunities like privately managed CRE have now become available on our platform. We have industry experts working to maximize your return on capital. We have an investment committee that reviews each investment opportunity before, during, and after the investment. We have a dedicated asset management team that follows the life cycle of the investment, and a dedicated investor relations team on standby to answer any questions you may have. What is private market CRE? So, of course, we believe CRE is a good investment, but it is always good to diversify. You may have some stocks in your portfolio, but diversifying beyond the stock market with alternative investments like CRE is additive to your portfolio and can offer a diversified approach. It's privately managed, it's not publicly traded, it's illiquid. So CRE encompasses a vast number of property types that we offer, like retail, multifamily, industrial, and more niche assets like medical offices or data centers. All of these asset types can offer a variety of investment theses. You can access all of these asset classes on our platform and diversify your portfolio by asset class. So let's get into why private market CRE. Every which way you can get into CRE has its pros and cons, which we'll get into a bit here. Private CRE like EM offers, public REITs, or DIY like buying an investment property yourself, which could include flipping the property, renting the property, managing the property, which is an overall headache compared to what EquityMultiple offers. Plus, you could end up like me, having to drive to Connecticut in the middle of the day for a leaky faucet. Of course, as everyone here knows, real estate is a finite resource, and everyone needs somewhere to live, and therefore real estate can appreciate in value over time. You're probably well aware of the public market volatility we've been seeing. So public REITs, which are traded on public markets, tend to correlate pretty closely with the stock market. Privately managed commercial real estate assets like we offer tend to correlate less with the public markets, and so can provide a stronger diversification to complement a traditional portfolio of stocks and bonds. So EquityMultiple gives you the opportunity to tap into these investments, like I said before, without the headache of being a landlord. Alternatives in general, and CRE in particular, provide a distinct opportunity to access alpha, which is returns derived from skilled management. It offers excess returns over the market because it is a relationship-driven business with direct control over the transaction. EquityMultiple provides more controlled opportunities that set the conditions of the deal, which benefit investors. For example, if you invest in a multifamily property, those returns are going to come from rent at the property, and the total return is going to come from selling the property at the right moment. Those factors are different from how you get returns from your stock portfolio. I just want to remind everyone, if you have questions, to add them below. So, institutional investors, like you can see on this graph, have been investing 1/3 of their portfolio in alternatives, which suggests its value to retail investors. It's additive to your portfolio for income-minded or capital appreciation-minded investors. It offers the ability to get diversified sources of income, and institutional investors have been investing like this for decades, and only until recently it was not available to retail investors. EquityMultiple brings this accessibility to invest like the pros without having to be a pro yourself. So EquityMultiple brings private CRE to individuals. So previously unattainable, inaccessible opportunities like privately managed CRE have now become available on our platform. You can invest anywhere, but we like to see it as at the human level. We like to know about the individual. We have investors use their investments to fund charities, kids' college funds, etc. And we support those stories. At the end of the day, real estate is a relationship-driven business, and without human connection, we have nothing. This quote on the right here is a quote from a current investor. I talk to all sorts of investors all day long. You don't have to have any experience per se with real estate in order to invest with EquityMultiple. I speak with small business owners, accountants, retirees, stay-at-home parents, engineers, lawyers, doctors, you name it. People with all different backgrounds. What EquityMultiple brings to investors is this human level. So let's get into it here. EquityMultiple has been recognized broadly in the market. We are seen as one of the leaders in the real estate investing fintech space, and EM is highly regarded by the leading investor education firms out there. So now we are going to get into a platform tour. So what you're seeing here is our invest page where you can see all of the investments we have available at this time. So you might see these categories that we have our investments bucketed into. So these are bucketed to help investors easily locate the type of investments they're looking for. So from here, you can see we have the invest page here. We have some resources that you can take a look at. Our help center, which has some helpful information, our track record, which you might be interested in. My portfolio will be all of your investments. So once you have investments, you'll have your current capital balance, return, exited, etc. My activity is where you'll find posts made of investments. So we have our dedicated asset management team that follows the life cycle of the deals, and they will be updating quarterly here. So let's take a look quickly at one of these. For example, this is the Metropolitan Multifamily. So in getting comfortable with any investment opportunity with EquityMultiple, there's a wealth of information. You can see the details of the market, details of the sponsor's track record, and more on these offering pages. It's organized, clean and clear, with metrics at the top going into more detail as you scroll down. This detail reflects the amount of due diligence our real estate team does during the underwriting and the structuring of a deal. And all of this writing might seem like a lot, but don't be overwhelmed. We have a dedicated investor relations team here that can answer any questions for you. And last but not least, I like to just highlight this chat here where you can always reach us. And with that, we'll get back to our platform. So now we're going to get into our buckets of investments. So we have 3 categories that provide distinctly different and complementary return profiles. So the keep category is going to be our alternative to savings, which are Alpine notes, which have compelling rates in the shortest terms. Our earn category is going to be investments focused on near-term income. So that's going to be like your debt offering, for example. It has a shorter duration and it's focused on income. Our grow category is going to be investments focused on long-term growth and upside potential. And that's going to be more like an equity deal. Longer duration, focused on appreciation and total return. So here we have a real life example. So this is an investment opportunity that we have available now. This is the Greater Orlando Small Bay Industrial. Like the title says, it is an industrial building in the Greater Orlando area. And now we're going to play a quick video from the sponsor of this investment opportunity.
There are a handful of things that are making this asset attractive to us, and we've been studying it for a while. We just haven't been able to acquire any of these buildings at an attractive basis and cap rate. So we've got tenants that are ranging from 1,000 to 3,000 square feet, but most of them in that 1,000 square foot range. Very easy to backfill those tenants. We ran comps on a couple of these different parks. Ranging from 50,000 feet to 100,000 square feet, and there's virtually no vacancy. Whenever there's a vacancy, there are 4 or 5 tenants to backfill them. That's according to 2 different brokers that do leasing on comparable sites. The nature of this small bay asset class is that leases are shorter term, so you have the ability to market the rents every 2 or 3 years, instead of locking in a 10-year lease where you're fixed at 3 or 4% annual increases, and the market rents could go up, 7, 10, 15%, like you've seen in Orlando. In addition, it's, like I said, expensive to build this. You need to build office space, you need to put HVAC in for that office, you need to put up drywall partitions and a handful of roll-up doors. It's not like building a 500,000 square foot box that's just open. So that makes the barrier for entry a little bit higher. Today, where land prices are, construction costs are, this can easily cost $150, $160 a foot, which I'm not sure makes so much sense to build on a speculative basis. And in addition, it's hard to build this on a speculative basis because you don't know if a tenant's going to need 800 square feet or 2,000 square feet. So buying this building in an existing condition, which is in excellent shape, we thought was a great opportunity, especially at $117 an existing foot, well below replacement costs.
So upon seeing that video, you can see the level of detail behind the investment thesis and how in the weeds our sponsor partners are to make sure each investment pencils out to a strong return. Just a reminder, you can put some questions below. I see some coming in. So last but not least here, we have our Alpine notes. If you're not ready to invest directly into commercial real estate right now, or if you're looking for more liquidity, our Alpine notes are our alternative to savings. This is a great way to dip your toes into EquityMultiple, and most investors start here. So we use the Alpine notes to pre-fill transactions and meet sponsor deadlines. They're short-term holds of 3, 6, and 9 months. And with that, I'll just say everything we talked about today will be available on our platform. The value of opening an account is that you can see all of our offerings, all the information, and get access to our investor relations team who can answer any and all questions for you via chat, email, or call. The chat is on the bottom right-hand corner of the platform. And let's check out the questions. So the first question here is, can I invest with my retirement account? Yes, you can invest with an IRA. We have some preferred custodians, but depending on the requirements, we usually can accept most custodians. So can you invest with an LLC? Yes, you can invest with an LLC or any sort of entity account if you have a trust or something like that, you can invest with that as well. So how do we select our deals? So through various sources, we get in touch with sponsors. We prefer existing relationships or repeat sponsors that we used before. We prefer sponsors with an extensive knowledge in their particular asset class area. We also underwrite the deals and ourselves using conservative parameters. One question here: how do I get liquidity? So like I said, like most of our assets are illiquid. So the Alpine notes offer some liquidity because they're 3, 6, 9-month options. And after, with those short terms, then they offer the most liquidity. We also have certain deals that may have a lockup period of about 1 year, and then you'll be able to redeem after that. And then some deals offer cash flow throughout the life cycle of the investment, but generally illiquid. What is a typical long-term hold as an equity investor? So our terms are typically anywhere from besides our Alpine notes, from 1 to 5 years. Most are around that 3-year mark. Can an investor stay in the equity deal until the property is sold? So actually, the way that most of our investments work is that you actually have to stay in the deal until the property is sold. So that would be like our equity deals are basically value add projects where the sponsor is raising capital from us in order to do some sort of value add project like renovations or improved management. And at the end, which is, let's say it's 3 years, a 3-year target hold period, that is when the property is sold, and then you receive basically like your majority of the investment at the end. There's other deals like more like a debt deal would be structured a little bit differently, where you might see more cash flow, or there might be contractually obligated to pay you throughout the life cycle of the deal, and it's more level. It's not going to be a huge increase at the end like an equity deal, for example. And I don't think I see any other questions, but if you have any other questions, well, I just saw last question here. I saw one come in. Will there be a cash on cash that is returned to the investors on a monthly or quarterly basis? Yes, some of our deals offer monthly or quarterly distributions. When it comes to a debt deal, they may be contractually obligated to pay monthly. When it comes to an equity deal, distributions are at the discretion of the sponsor. So, that's more focused on long-term income in equity deal, for example, rather than the cash flow during the life cycle of the investment. So with that, I'll give everyone time back in their day. If you have any other questions, you can chat me on the bottom right-hand corner of the platform. You can email me at abby@equitymultiple.com, or you can give us a call. And I'm sure everyone's sick of my voice now, so thank you.